Welcome to Mortgage Giants. I'm tall, he's taller. One thing that did pop up on my TikTok.
I like it. It's one of those ones that's like, you wait until you say it out loud, and then it's like, okay, yeah, that might actually stick.
Ron Butler popped up on my TikTok feed.
Yeah.
And the video that I saw was interesting in that what he was advising people to do. If they didn't like their renewal rate, go secure something else and provide that proof of better rate to argue with your current lender and get a better rate. And you're basically telling the client to screw over whatever broker they're going to use to secure that better rate.
Yeah. Renewal business, I think in general, it's unique from purchasing, from refinancing, and there is always that level of you're providing advice, you're providing a comparison, and you're letting the client know that they absolutely are within their rights to shop the market.
Right.
The last thing you want is for anybody just to sign on the dotted line and with their current lender and just take it without knowing that was a good rate, a fair rate, or a terrible rate. So from that perspective, providing that level of just service to an existing client, I totally agree with. And generally, I find that when I'm entering into a renewal conversation, it's from that perspective of, okay, well, let's just make sure that the client is being educated on what their offer is from their current lender. Can it be beaten? And usually in that conversation, that's when the interesting stuff comes out. Life changes, future goals.
Right.
And then it often isn't a renewal anymore. That turns into a planning session.
Right.
And so refinancing their current house now to pay off debt.
Right.
None of that comes up in just a surface level renewal conversation.
Yeah, for sure.
And their bank is certainly not talking to them about what your household debt is. Are you struggling, as a household unit?
Yeah.
So they're not having that conversation with them. So that's why there's still that benefit of talking with a broker, because paying off $40,000 in high revolving consumer debt, meaning credit cards, is absolutely a conversation. And those are actually some of the most rewarding files that we'll ever work on.
For sure. You're getting the clients out of a pinch in that situation that they don't even realize that they're in.
Yeah. Yeah. I don't know if I'm in full support of Ron's opinion on that, because I prefer to approach it from the talk to your bank. You're their client.
Yeah.
Get them to tell you what their offer is.
Yeah.
Then let's review that together. Let's pull up the rate sheet from every lender that we have access to.
Yeah.
And you will see what the market's showing.
Right.
And if we can beat it, at that point, it's saying, okay, let's enter the relationship here of let's pursue a better rate. Let's talk about the debt. Let's talk about a way that we can make the whole, holistic financial situation of your family, jive, and earn that, build that relationship.
For sure.
Right.
But I thought it was interesting that he was basically encouraging people to screw over might be too harsh, but basically just use a broker to get something better elsewhere.
Yeah. Yeah, that's an interesting perspective for sure. I'm not in the business of making a bank more money. I don't need to go to bat for the existing bank that was trying to screw over their client. No, I want to be kind of in that upfront. What's your best offer? And then let's go find another bank that's saying, well, this is our best offer.
Right.
And operate on the level. When clients call too, I kind of have a trigger word.
Yeah.
That always kind of gets my hair up a little bit.
Yeah.
As soon as clients start talking about leverage, they want to leverage the banks. They want to leverage this relationship. They want to leverage. To me, that always just puts a little bit of scare into me, because I kind of want to talk to them about that and say, well, if you keep leveraging relationships, if you keep leveraging your friends and leveraging your family and you might run out of friends and relationships.
Yep.
And then all of a sudden you're in a dark place because you've over leveraged your relationships.
Yeah.
So that's always a word that I get in some of those kind of conversations that do just kind of put a flag up and say, okay, well, they're willing to leverage this person, they're willing to leverage me.
Yes, exactly.
And I'm all for, we're here to go to bat for every single client. And it's fair that a new person that hasn't worked with us before doesn't know that. So there's trust that needs to be built.
Yep.
And that takes time. And I get that.
For sure.
But if you want to start leveraging people you know, like, and trust, I think it's going to run out. And you could be in some deep shit.
Right.
When push comes to shove and you need a friend.
Yeah.
You might not have them.
For sure. Yeah. And I'm sure there's brokers out there that people have heard of that they don't want to be in a situation where the broker is trying to force them. But part of our goal is to get them into the right situation, whether it's with us or whether it's with their current lender.
Absolutely. And like if their bank's offering them a rate and maybe the next guy is a 0.05 or we call basis points better, there is a realistic chance where I'm just going to write them that email at that point and say, hey, thanks for the conversation. At this point, we could do a better rate at Bank X at this rate.
Yeah.
And have that offline conversation with that client saying, please take that back to your current bank, show them this, and they'll match it for sure. It's only if we can really save them significant dollars or package in a refinance to pay out that consumer debt I was talking about, or like really move the needle for them that we're going to make them go through the document collection and all of that.
Yeah.
So from that sense, do I write those emails? All the time.
Yeah.
And what comes from that is trust.
For sure.
And then we get to talk to their brother, we get to talk to their kids, we get to talk to, and say, look, this is the way it is, and you will get an honest response from us. So letting go or not completing a transaction for a person where it's not really benefiting anybody. Turning that one into just an easy renewal for them at the bank leads to so much more, in the future. So
for sure.
Yeah. So from that perspective, I could say, Ron, sure, be a resource. We're always a resource for the clients. But we want their bank to come to the table with a fair offer. And if it's not fair, they shouldn't be rewarded for that.
And then on that renewal topic, would you say that you've seen it really be a coin flip in terms of what lenders are willing to offer? Because sometimes good clients will get a terrible renewal offer, and same type of clients will get an amazing renewal offer from the same bank.
Yeah.
It's crazy.
It's like as scientific as our credit scores.
Yeah.
That's also a system that's always kind of a bit confusing too.
Right.
It's not an exact science there either. But renewal offers really are all over the board.
Yeah.
There are certain banks that are known to be very aggressive on their renewal offers, and that's great.
Yeah.
And then there's some that are definitely from week to week.
Yeah.
In and out on how competitive they can be.
Yeah.
And I say can be. I don't think that anybody's in this from a predatory standpoint.
Yep.
It's just how much resources they have available to get out into the mortgage market will determine how competitive they can be on their rates. So it's hard, and that's why you need to have a partner like a broker that's gonna, The other thing, and I will say this about renewals, early renewals, talking to your bank right at that 90 to 120 days before your day is very important. They should be reaching out to you. Most banks say they're going to call you within 90 days. Prior to your renewal. What I'm seeing is that they're going to try to apply some pressure on that person to sign at that time. This rate is only good for 48 hours, 72 hours. Otherwise, it's gone. That really should never be the case. you have the right to say, well, no, my renewal date is in 90 days, in 120 days.
Yeah.
I would like my renewal offer to sync up with my renewal date, because likely today, interest rate that you have currently is going to be far superior than what my rate is going to be in 90 days.
Yeah.
So I want to ride that, 2.39 to the sunset. Like I want to max every last second of that 100 or 5 years.
Yeah.
I'm squeezing.
Mm-hmm.
So if you're ever, people are getting told, well, you got to renew early, start your term now. That's not ethical in my opinion. I don't think that makes sense. So let's say, okay, the bank says, no, this new rate is going to be available. It will take effect in 90 days from now.
Yep.
You say, okay, thank you very much. You can sign that paperwork. You can return it to the bank, and they will hold that rate for you. But if that lender's rates come down from today and 90 days, they're not going to call you up and, say, hey, good news.
Yeah.
Rates came down, and we want to extend that, to you, because that's not going to happen.
Yeah.
So what happens with the broker channel, and what we do as brokers, is we look at the best rate on that date, 90 days, 120 days, whenever we're able to start that conversation. And if it is Bank X on the start of this conversation, up until about, really, let's say a month before the renewal date.
Yep.
If rates change, we have that flexibility to take that mortgage in your file to another bank.
Mm-hmm.
We watch it for you the whole way through.
Yeah.
And even if that bank that we got you approved on day one has lowered their rates, they will do a float down. They will honor that lower rate, because if they don't, they know that we are nimble and will move that mortgage for our client.
Right.
So even if it's rate X and rate Y, your current bank and the new bank, it's the same on day one.
Mm-hmm.
If you work with the broker, you still have more, access to market.
Yeah.
So that's one thing about renewals is never sign early. Like don't take a new higher rate into effect before you have to.
Yeah.
And know that there's still time to watch the market.
Yeah. One thing that come up recently for me 2 times now is a specific lender issued out their standard 5-year fixed, 5-year variable renewal, and the client asked for the shorter term option.
Mm-hmm.
They got sent the shorter term option. They're like, actually, we don't want the shorter term. We're going to go with the 5-year. And they said, oh, that 5-year rate has changed. By asking for the shorter term, the 5-year rate is now gone. It's like, that is some shady stuff. Like, you should be able to keep all of those terms and rate options and pick within that 120 days versus just only offering like one at a time type of thing.
Right. Yeah, that's just anything, any little change, right? Like in their eyes opens up the door for. Yeah, that is unfortunate.
Yeah.
I don't know how to comment on that one, right? Like that's just what people need to be aware of.
Yeah.
And truthfully, like you do want to get this as accurate in the first submission, as possible.
Yeah.
Every time you do go in for a change, whether it's down payment amount, amortization change, all that stuff, like you are exposing yourself to the bank's mercy.
For sure.
Yeah. And that would be consistent through most banks.
Yeah.
I wouldn't say we can just isolate one.
Yeah.
They do use any type of material change as an opportunity to reevaluate rate.
Yeah.
So yeah, that's why it's important to be as upfront with let's drill into what you think the best likely outcome is. First.
Yeah. And that's why it's also great to work with a broker and your bank at the same time.
Mm-hmm.
Because if you don't know that they're going to pull that 5-year rate if you request a 3-year,
right,
and then it happens,
starting from scratch, potentially at a broker that now you're on a tight timeline and stresses are high.
Exactly.
Obviously, rates are always at the forefront.
Yeah.
And I don't know. It's the changes that have happened over the last few months have divided a lot of very smart people, smarter than we are.
Yeah.
We read constantly on this, and the divide is growing, I think,
Yeah.
on the opinions.
Which is weird because normally it's heavily one-sided. One
Yeah.
way or the other, there's a general
Yeah.
consensus it's going to go this way. And now it's split. And people are like, no, it's going to go this way. No, it's going to go that way.
Yeah.
Which is a weird time to be in.
It is.
So, yeah.
Apart from the Alberta, markets, too, I think we're getting a lot of questions on, it's always now is now the time to buy.
Mm-hmm.
I'm sure you get that question a lot too. Is it a good time to buy?
Yeah. Which is it's a tough yes or no answer because so much of it I feel like has to depend on the person in that stage of their life.
Yeah.
Like, do you need a bigger home because your family is growing? Then now is better than waiting because you need it for your family. But like maybe you don't need a bigger home and maybe you can sit out for a little longer until the market stabilizes a little bit more.
Yeah. Yeah, for sure. The kind of go-to line that I find myself saying a lot is when rates are higher like they are now, and I don't even want to use the word normal because where is normal? Right? Like the last 2 years have been historically low and honestly rates that we may never see again. So everybody's definition of normal is different.
Yeah.
So you got to address that first.
Yeah.
You can't just say normal because normal to some people, normal to a 68-year-old, they could say 5.
Yeah.
They would say it feels stable to them. Whereas a millennial is going to say, 2.89. So that's different. Different levels of normal. But when rates are low, everybody enters the market.
Yeah.
There's way more buyers. So when there's more buyers, what happens to, a property that comes on the market is there's multiple offers.
Yeah.
And then that trend sets in and then realtors start looking at comparable sales and then they start pricing homes a little bit higher.
Yep.
And they start to push that ceiling. Where is the ceiling?
Yep.
On a single family detached home, how high will this market bear?
Yeah.
So to buy a home, at 2.89%, you may pay, let's just use a $400,000 house in Alberta, suburbia.
Yeah.
You might pay $440 for that house in a low interest rate environment. Whereas in a stable, pushing higher interest rate environment, that house you might get for $405.
Yeah.
And on your terms, you get to sync up your possession date with your sale date, and it's all beautiful, and you kind of, it's a mutually beneficial relationship between the buyer and the seller.
Yeah.
And you benefit that way. So a higher interest rate at a lower purchase price, there's benefits there. It's not. So is it a good time to buy? Yeah.
Yeah.
Yeah. Like you said, if your family needs it, for sure.
Yeah. And I feel like when the good time to buy situation comes into play where it's an easier yes or no is if it's an investment property, because then you need specific numbers to hit to make it make sense.
Yeah.
It's a little bit different when it's a primary residence.
That is true. And unfortunately, rents are always going to meet the mortgage payment.
Yeah.
The more an investor is paying on their interest rate, ultimately, that only lasts so long before that rent goes up. And then, who ends up paying for it? It's the renter. Yeah. It's the tenant. It's everybody, downstream.
Yeah.
So,
and then it causes conflict because then those renters are feeling like they're getting pushed out because they might not be able to afford it.
And usually those renters have dreams of home ownership themselves. And now all of a sudden they're paying, on average in Alberta, I'm just going to say $300 to $400 more this year than last year.
Yeah.
Well, that further delays their path to home ownership. So when the government's trying to regulate inflation and they want to kind of target homeowners because they seem to be more stable and better off, maybe in a financial security from that standpoint, well, it's often not them that's going to pay for it at the end.
Yeah.
Trickles down.
Yeah.
So that is unfortunate. But and then now immigration.
Yeah.
I mean, 1 million people came into Canada. Actually, as of last week, they said, yeah, the 40 millionth person landed in Canada. So 1 million last year, 1 million this year potentially.
Yeah.
And a lot of that is going to funnel into Alberta because of affordability.
Yeah.
Toronto, Vancouver for a new landed immigrant.
Even Calgary.
Calgary's out of control right now.
Yeah.
Too. So that's the flow.
Yeah.
It's from the coast into the prairies, Calgary, and then up, into the Edmonton and then satellite communities. So like we're seeing that already. So rents are going to go up.
Yeah.
And then these new landed immigrants are going to be, struggling.
Yeah, they're going to be feeling it for sure.
Yeah, so that's not great.
Yeah.
And I mean, with the cost of building and there's nowhere to house these people right now. Like it's like
there's a build problem too, and
yeah, for sure. So there's some new overlays going into Edmonton in January 1st.
Mm-hmm.
There's going to be some more density,
yeah,
options for investors to like start, adding more, just the garden suites and the basements, and like hopefully the city and municipalities can keep up on the demand for permitting and will green light a lot of these projects to build density.
Yeah.
To the dismay of most neighborhoods, like you got these neighbors that are gonna freak out.
Oh yeah.
As density is built up in their communities.
Yep.
But what's the solution?
Yeah.
Big builders, they're probably slowing down on what they want to produce because its costs are too high.
Yeah.
Price per square foot is crazy.
Yeah.
So it might come down to the families who want to throw in some capital and try and build density. Yeah. So hopefully the cities can keep up.
Yeah.
And actually do want that. They say they do.
Yes.
They're making changes, which make us think they do.
But
But
we'll see.
permitting and stuff like that always seems to be a challenge.
Yeah. Sure.
And if you piss off the people that want to do this, well, they're going to stop doing this.
Yeah.
Like an example, like BC is, I know, got some challenges. I have some close family friends that were trying to build a cabin out at a lake in BC. Yeah. They pulled the pin after months of red tape, and they had to they found at some part on the lake, they found an arrowhead, and then all construction had to stop because they had to do archaeological digs.
Oh my goodness.
Before anything else could proceed at the home buyers or the landowner's expense. Yeah. And all of a sudden, and then it just snowballs. And then all of a sudden, they're like 6 months, a year in, and they're like, we can't. This is out of control. Yeah. They clearly don't want development. Yeah. So they're out, and now that removes a family from the local economy, that grocery store, that gas station. Yeah. All of that. This is not going to benefit from moving families into these more remote locations. Yeah. Wild.
Yeah, that's nuts.
Yeah. Like, think about what one semi-affluent family could do to a smaller community.
Oh, so much.
Like, they might even buy a boat, from the local marina. Yeah. Or a second-hand boat from a family that needs to sell it because they're maybe not in as good a situation as they want to be. Yeah. So, like, you take over debt from a family that needs to offload it, or you're purchasing new, or, like all of those things. Yeah. It's just crazy. Yeah. Like really, individual families do make differences in smaller communities.
For sure.
So get them out there.
Yeah.
Like, help those smaller towns build. Yeah. Attract development.
Yeah.